All right, let's talk about something that can feel, well, a little complicated. Retirement accounts. You hear this alphabet soup all the time, right? 401k, IRA, Roth. It can sound like a whole other language, but I promise you, we're going to clear all that up today. By the time we're done here, you'll not only get what it all means, you'll have a real, solid plan to move forward. This right here, this is the big question, isn't it? It can feel like you need a finance degree just to figure out where to put your money. But the good news, you don't. There's a really simple logic to all this, and we're going to break it down piece by piece. We're going to get you from confused to confident, knowing exactly which account to use and when. So, here's our game plan. We're starting with the most important idea of all, the tax break. Then we'll look at the two main places you can save. After that, we'll dig into the big choice you have to make. And of course, we'll talk numbers. And then we'll tie it all together with a super simple strategy. Think of it like building a house. You got to get that foundation right first. And that's exactly what we're going to do.
Okay, first things first, let's talk about the why. What makes these accounts so special anyway? It's not about trying to pick the next hot stock. It's about a huge advantage the government literally gives you just for saving for your own future. It's kind of like a partnership, and trust me, it's one you want to be in on.
So what is a retirement account really? At its heart, it's just a savings account with a superpower. And that superpower is tax benefits. The government basically makes a deal with you. They say, look, you set money aside for your future, and in return, we'll give you a really nice tax cut. It's their way of encouraging all of us to be financially stable down the road.
Now, this is where it gets really interesting, and this slide nails it. It all comes down to one question. When do you want to pay your taxes? With a traditional account, you're paying tax on the harvest. You put your money in before taxes are taken out, which lowers your taxable income today. You get a tax break right now. You just pay taxes way down the line when you take it out. The other option is Roth. With a Roth, you pay tax on the seed. You put money in after it's been taxed. But the trade-off is amazing. All that money and all the growth it makes over the decades comes out completely tax-free in retirement. So do you want the break now or the tax-free money later?
All right, so we've got the why, that big tax break, and the how, traditional versus Roth. So let's talk about the where. Where do these accounts actually live? It's way simpler than it sounds. They basically fall into two big buckets: accounts you get at work and accounts you open yourself. The most common one, the one you've probably heard of, is the 401k. And the beauty of it is that it's just easy. Your employer sets it up, and the money comes right out of your paycheck automatically. Out of sight, out of mind, which is fantastic for building a habit. But the real magic, the absolute game changer with the 401k, is something you just can't get anywhere else.
And that brings us to what is, I am not kidding, the single best return on your money you will ever find, the employer match. A lot of companies will match what you put in, up to a certain point. So if they offer a 100% match on, say, the first 3% you save, that is an immediate, guaranteed 100% return on your investment. It is literally free money. There is no other investment on planet Earth that can promise you that.
The other main path is the IRA, which stands for Individual Retirement Account. And just like the name says, this one is all on you. You open it yourself at a brokerage firm. Now, you won't get that free money from an employer match, but what you get in return is huge. Freedom, total control. Instead of a limited menu of maybe 20 funds, you have thousands of options. You are completely in the driver's seat.
Okay, so let's put these side by side. The 401k is through your job. Its killer feature is that employer match. The trade-off? You have a pretty limited menu of investments. The IRA, you open it on your own. No match, but you get almost unlimited flexibility and control. And see that last line, contribution limit? Notice how different they are. That's going to be a really important part of our strategy in a few minutes.
Okay, now we're going to bring it all together. We talked about the tax break, and we talked about the two kinds of accounts, workplace and individual. Well, for both a 401k and an IRA, you're often faced with that same exact choice we talked about earlier, traditional or Roth.
And we're right back to this fundamental question. This is the decision at the heart of your entire retirement strategy. It's all about making a smart guess about your own future. Do you pay the tax man now, or do you pay him later?
And the logic here is actually pretty straightforward. If you think you're in your highest earning years right now, and you expect to be in a lower tax bracket when you retire, then traditional makes a ton of sense. You get that tax deduction now when your tax rate is high. But if you're just starting your career, and you expect your income and your tax bracket to be much higher in the future, well then the Roth is probably your best bet. You pay the taxes now at your lower rate and let all that future growth happen completely tax-free.
It's a really powerful play for the long game.
Okay, let's get into the nitty-gritty, the numbers. The government puts a cap on how much you can put into these accounts each year, and these limits are a really important piece of our strategy. Just so you know, we're looking at the numbers for 2025, and they usually tick up a little bit each year.
For your 401k in 2025, if you're under 50, you can put away a whopping $23,500. That is a serious amount of savings. And that limit is for your total contributions, whether you're putting it in a traditional 401k, a Roth 401k, or a mix of both.
Now, for an IRA, and again, this is for traditional and Roth combined, the 2025 limit for someone under 50 is quite a bit lower, at $7,000. Just let that sink in for a second. That big difference between the 401k limit and the IRA limit is the key that unlocks the whole savings strategy we're about to build.
And hey, if you're 50 or over, the government gives you a nice little boost called catch-up contributions. For an IRA, you can add an extra $1,000. For a 401k, it's a much bigger jump, an extra $7,500. There's even a brand new, bigger catch-up for people between 60 and 63 to really help them power toward that retirement finish line.
So, we've got all the pieces on the table. We know the why, the where, the how, and the how much. Now for the most important part. How do we put it all together in the right order? Well, there's a simple, powerful action plan that a ton of financial advisors recommend, and it's designed to make sure you squeeze every bit of value out of every dollar you save.
Here it is. Think of it like a savings waterfall. The money flows from one step down to the next. Step 1, and this is the absolute most important non-negotiable step, put enough in your 401k to get the full employer match, period. That is the free money, that 100% return. Never, ever leave that on the table. Okay, once you've done that, the water flows to step 2, max out your Roth IRA. Why? Because here you get that investment freedom we talked about, plus all that awesome tax-free growth. So you capture the free money, then you get flexibility. And then, if you've done both of those and you still have more you can save, the water flows back for step 3. Go back to your 401k and keep contributing until you hit that big $23,000 limit. This order ensures you get the best deal first, then flexibility, then you just max out your total savings. It's a beautiful system.
And just like that, you get it. It's not so bad when you break it down, right? You now know that a 401k is all about that match, and an IRA is all about choice. And you know the big decision between traditional and Roth is just a strategic bet on when you want to pay your taxes. You now have the knowledge. You are officially in the driver's seat of your own financial future.
You know, there's this old proverb, and it has never been more true than when it comes to saving. It doesn't matter what you did or didn't do yesterday. The only thing that matters is what you do today. By starting now, with the simple plan we just laid out, you can change the entire course of your future. The most powerful step is always the first one. Thanks for tuning in.